The United States' largest investment in Vietnam is a high-technology company called Intel. Intel, a semiconductor giant, has paved the way for billions of dollars of investments into the Southeast Asian country. They stand toe-to-toe with some of Vietnam's largest foreign investors, such as South Korea's Samsung and LG, to Japan's Toyota Motors and Panasonic. So how big is Intel's investment into Vietnam? And what are the economic impacts to the country? Let's first begin with its history. Intel's first investment into Vietnam started in 2006. Intel Corporation said that they were looking to establish an assembly and test facility in the country. An assembly and test facility is a facility where semiconductor chips are put together and tested for quality before being shipped to customers. What made this investment significant was because Intel was the first in the semiconductor industry to invest in Vietnam. They were amongst the pioneers, which were essential for a country that is still developing and lacking needed infrastructure. The chosen facility is located in Ho Chi Minh City. It would encompass over 500,000 square feet. Intel was looking to invest over $1 billion, which was a big investment back in 2006. This was hailed by local governments and citizens alike. The reason for such a big investment was because this facility is expected to be the largest in Intel's global assembly and test network. Choosing Vietnam for Intel's largest investment should have been a difficult choice. Why did they even choose Vietnam? For the most part, Vietnam was a communist country. It was also too far from the United States. There were many other options ranging from South American nations to even other Southeast Asian countries. So why Vietnam? Well, for the most part, as a developing country, Vietnam had lower wages. On top of the low wages, Vietnam also had a government that was eager to please their foreign investors. They were giving incentives such as tax breaks for foreign investors, and this made the country stand out amongst the huge investment locations. Rick Horvath, the general manager of Intel Products Vietnam at the time, said that Intel had a strong constructive relationship with both local and national authorities in Vietnam. The smooth discussions have enabled the company to significantly expand the facility. Intel CEO Paul Otellini in 2010 said that Vietnam is cheap and hungry for tech companies like Intel. Their per capita income was just $2,900, less than half of China. And on top of that, Intel had a virtual hotline to top government officials. One can also say that Vietnam was lucky to score this. That is because Intel was embarking on enhancing its global production capacity. They wanted to outsource a huge portion of their business. Vietnam was one of the few countries that joined countries like Malaysia, Philippines, China, among others. And just a year after this announcement, construction would immediately start, and by 2009, production would begin. The facility was expected to create up to 4,000 jobs. Before that began, there were a lot of news circles around experts and local governments alike. They wanted to know how big of an economic impact Intel Vietnam would bring to the country. The deputy general director of the Vietnam Post and Telecommunication Group said in a magazine in 2007 that Intel Vietnam would contribute over $5 billion to the IT sector of the country. That was an optimistic target, but what he missed out was the fact that Intel Vietnam would further increase their investments over the years of its operation, contributing far more than just $5 billion into the economy. In 2009, Intel wasn't just invested into their Ho Chi Minh City facility, they were also invested into the entire country. The Intel chairman at that time, Craig Barrett, met up with Prime Minister Nguyen Thanh Dung, to which they discussed and struck a partnership to work on a roadmap that would enable Vietnam to become a leader in information technology. Intel said that they will be providing educational software, wide bandwidth internet connections, and IT training for 15,000 teachers through its Intel Teach program. This, among others, have paved the way for a higher productive workforce. This partnership would expand a year later when Vietnam's Ministry of Finance signed a Memorandum of Understanding (MOU) on the transfer and test run of the American IT giant's new technology in the country. By the middle of 2010, Intel facility sitting in the 115-acre Saigon High-Tech Park would begin production. At the same time, Intel Vietnam would embark on the second phase of the project at a cost of $300 million. The Saigon High-Tech Park, where they are located, has so far attracted many other major investors. It had an estimated investment of $1.76 billion in 2010 and was employing more than 10,000 workers. A year later, Intel Vietnam would bolster its case for a better Vietnam economy. They were looking to replace imported materials for domestic material suppliers. What this essentially means is that the products that they want to create in Vietnam should not be imported. They should be built and sourced from other local Vietnamese firms. There would be less money going out of Vietnam this way and more coming in. They would continue the search for domestic suppliers and continue to reduce import reliance over the coming years. By 2013, Intel's contribution to Vietnam's economy had reached billions of dollars. In that year alone, they had an export value of over $2 billion. Moreover, the number of domestic suppliers helping Intel Vietnam has increased from 3 firms to over 16 firms by 2014. The manufacturing plant in Vietnam was so big that it was indeed Intel's largest overseas facility. It was 3 times the size of a typical Intel assembly and test plant and twice the size of the company's site in Malaysia. But despite these advancements, the localization rate at the Vietnamese plant remains relatively low, with only a few local enterprises qualified to supply equipment and parts. Intel aims for an 80% localization rate in Vietnam, a goal contingent upon local suppliers enhancing their capabilities to meet Intel's stringent technological standards. Fast forward to 2019, Intel Vietnam continued to enjoy enormous growth, along with a strong government backing. Ho Chi Minh City People's Committee Lê Than Liêm has committed all possible support for Intel Products Vietnam to do effective business for mutual growth. When they celebrated Intel Vietnam's 14 years of operating in Vietnam, they cited that from 2010 to 2018, the company has earned over $26 billion from exports. These exports helped Vietnam's economy by boosting its trade balance and enhancing its reputation as a critical player in the global semiconductor supply chain. 2 years later, Intel announced a new major expansion. This time, a $475 million investment into the local company. This would bring their total investment to $1.5 billion. As of the end of 2020, Intel Product Vietnam said that they shipped over 2 billion units to consumers worldwide. Intel Vietnam did not just become an integral part of the semiconductor supply chain, they became one of the largest sources of it. Ho Chi Minh City is no longer a small bustling site. It is home to some of the world's largest electronic companies. Samsung, First Solar, Furukawa Automotive Parts, Renesas, and Intel have led billions into the city. According to newspaper Vietnam News, as of the end of 2020, Intel Vietnam has registered total export values of over $50 billion and helped create nearly 7,000 jobs. Unfortunately, Intel Vietnam's story has not always been bright. In 2023, there were reports circling about Intel Vietnam's next big investment. They were looking to invest over $3.3 billion into the country. This would double the capacity of their plant in the Saigon High-Tech Park. Many citizens, especially those looking forward to the future of this industry, were praising the government for their capability to invite big investors. On top of that, US President Joe Biden was banking on Vietnam's chip industry. He announced support for that country, and he announced a series of deals including semiconductor, aerospace, and infrastructure. So what could go wrong? If the President of the United States was there to help the industry, then Vietnam can indeed become a global semiconductor manufacturing powerhouse. But shortly after Biden's visit, US officials informed a select group of US businessmen and experts that Intel had shelved the expansion plan. Intel did not state why they called off the expansion, but there was news circling around the media in Vietnam citing local officials. These people people said that Intel was now concerned about the stability of power supplies and excessive bureaucracy. But regardless of what their problem is with the country, people should not forget that Intel itself is no longer the crowning jewel of the semiconductor industry. They do not have the market share they once had back in 2006, and this can be one of the reasons why it is no longer as aggressive an investor it once was. If you took a look at the company's market capitalization, which is essentially its valuation, the company has not actually been since 2007. Back in 2007, Intel was a company valued over $157 billion, but today they are worth only $130 billion. That is more than a decade and a half of loss in valuation. In either case, whatever happens to them in the future, they remain a significant part of Vietnam's semiconductor history. But anyway, do let us know what you think. Thanks for watching.